Hello, this is Manesh Patel with HockeyNashi.com. This is the E instead of an I here. Our motto is basically trading made simple, start earning today. There's our normal disclaimers right there. And today's workshop, we're going to discuss how to use HockeyNashi to optimize any existing system. In the previous videos, we kind of showed you how to use HockeyNashi within itself. But this time, what we're going to do is show you how to use it to apply it to any existing system out there today, no matter what your trading plan is. Now, remember this, we're going to go for everything high level, and we're going to cover majority of the major popular systems from moving averages, Fibonacci, Elliott Wave, Ichimoku, and so forth. So we're going to show you exactly how to do that in this little video. Okay. We're now going to begin to show you how to use the HockeyNashi as an optimizer for existing systems. In the previous video where we talked about secrets of HockeyNashi, we talked about pivots. We're now going to go to the second most popular system out there. This is kind of a tie between moving averages and Fibonacci, but we're going to talk about Fibonacci first. In all the systems out there, doesn't matter what your trading plan is, doesn't matter what technical indicators or what you're doing, you're looking for some type of event to occur. When that event occurs, at that point you're placing an entry based on your trading plan. Now, what we're doing is that we're still looking for that event to occur based on your trading plan. But now what's happening is we're confirming the trade entry with HockeyNashi candles. Okay, and that's basically what we're doing here. You can see a nice bullish trend here. What we did was we did a Fibonacci retracement from here to here, and you could see the different levels here, the 38.2%, the 50%, 61.8%. Major pullbacks in Fibonacci world basically occur at 50% and 61.8%. So that's where people are sitting there looking to sit there and enter a trade around those levels there. In order for that trend, if it gets those levels here, you want it to break that 38.2% level, and then it could keep on going higher to the 88.6 or the 78.6 or the 100% and so forth. Okay, so that's basically how Fibonacci traders work. Now over here, what we're looking for is very first time it came to 38.2%, we hit that level here, we held it. Then now what we're doing is once we get to these Fibonacci levels, we're looking for HockeyNashi bullish bars to occur. At least two of them that has shown you with no bottom wicks at all, with the highs in the closing price and the highs going higher. And you could see here, we really didn't get it at all. This green bar here had a bottom wick. You can't really see it. So we really didn't see a bullish HockeyNashi signal at all off the 38.2%. If there was, this would have bounced off the 38.2% and this would have kept on trending. Now what's happening is we're getting to the 50%. On the 50%, believe it or not, you can't tell, but it closed below it. Either way, it's kind of like a boundary condition. So let's start looking for bullish candles. So here's a HockeyNashi bullish candle here. This was confirmed here. The closing prices went higher, the higher price went higher, but notice one thing, everything's ranging within these this big red bar. Either way, you could have taken this bullish here, and you got to get back to the 38.2% retracement right there. Instead of going back there, this thing came down, kind of closed for 2 bars below the 50%, which was telling that this trade is in danger here. Either way, your trading plan says trade it from here to here with a stop below all this level here. So you still would have been in this trade and you got to the 38.2%. Now, once you get to the 38.2%, you're looking for HockeyNashi candles that had no wicks in there in order for you to break this here. All of these candles, this candle here had no wick, but it held that resistance. We're looking for it to break that resistance with no bottom wick at all, and that really did not happen at all. This one had a small wick right there. So we really didn't see that at all. So what you can do is exit the trade right there, or you could sit there and wait for the red bar here to kind of get you out of the existing stop here. Either way, you could have played it that way. Okay, so if you played it from here up, you made a little money here, not much at all. Now what's happening is you have to wait for green bars to confirm the break here, or it's going to come back down here and break the 50%. Over here, it broke the 50% retracements right there, and at that point you could have entered long here to come back up to here, which it did do. Okay, as long as we held the 61.8% retracement here, where we didn't close below it, we still had a high probability coming back to 38.2%. We came back to the 38.2%. We broke it here. So you could have stayed in this trade here. You could have taken some positions off. Either way, you stayed in this trade, and this red bar here, you would have exited the trade with a small profit right there. If this was going to continue to keep on going up, it would have held the 38.2%. It didn't do that at all. Instead, you got out of the trade right there. It broke the 61.8%, which told you basically this bullish trend is pretty much over because the major pullbacks pulled back too much to a point it's either going to enter a consolidation pattern or eventually will enter a bearish trend. So that's a summary, a quick summary on how to use Hakinashi in the Fibonacci world. Let's now discuss how to use Hakinashi to optimize Bollinger Bands. Now, we've just taken the simple Bollinger Bands here. We've not tried to sophisticate this at all. We kept it short and simple. But notice one thing. Every time you get to this 2 standard deviations on the top or bottom here, what you're looking for is the reverse Hakinashi candles. And you got a reverse Hakinashi candle here, and you can see it traversed right back to the top or upper 2%. Over here, you really didn't get a bearish. This one had a little wick there. That had a wick here. That had a wick here. That had a wick here. That one didn't have a wick here, but notice it did not break the middle of the Bollinger Bands at all. This one had a wick too. So you really didn't have anything here, a Hakinashi bearish candle at all, to kind of give you a signal that it's going to go from the top or upper 2 standard deviation to the bottom at all. Over here, you could see that you still had bullish, 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 bullish here. This is the first red candle here that confirmed that we now have a high probability to get to the bottom part of the Bollinger Bands. We did that. We got there. We got there. We got there. Over here, we had now a bullish Hakinashi candle here that confirmed we had a high probability to get to the upper, which we did here. So you're just applying basically the Hakinashi candle system when you get these standard deviations here. In this example, this is 2 standard deviations. A lot of people in Bollinger Bands like to use 3. You could do the same thing for 3 standard deviations, or you could do anything for the various variations of Bollinger Bands out there. But basically, you're looking for the bullish Hakinashi candles to confirm a bounce off the lower part of the Bollinger Bands, and you're looking for the bearish Hakinashi candles to confirm a bounce off the upper part of the Bollinger Bands. Okay? We're now going to apply Hakinashi to moving averages. I got a 50-day moving average here, and then I got a 200-day moving average here. The way the moving average system works is basically if the 50 is above the 200, that's bullish. If the 50 is below the 200, that's bearish. So we're looking for bullish Hakinashi signals once we come to these supports. We're only looking to trade once we hit these supports here, whether it be the 50-day moving average support or 200. Okay, so the crossover happened here. Now we're looking for bullish here. There was a bullish signal right there, so you would entered right there. And at that point, you would have rode it all the way up to there. So small profits there. Here, you would have entered. Right there, you would exit. Small profits there. Over here, you would have entered right there. And then take this up to right there. So small little profits here. Remember, you can't control the market. You take whatever it gives you. So these small profits there. And you keep on going and playing there. Okay. Now, over here, I showed where you could kind of re-enter here. This really didn't bounce off the support here. So that's a little more aggressive trading right there, okay? But most of the times what you want to do is take the signals, start looking for the signals once they bounce off the support or the resistances. Here, this is bearish. You're not looking to trade bearish at all since it's bullish. Here, you're going to enter here. Probably would have been out of the trade right there. And then over here, you could have entered the trade right there and rode this thing all the way up to there. Now remember, that didn't hit the support here at all, so you would have been very careful there. Here's another signal here. We got to the support here. Now we're looking. We enter that trade. We get out right there. Now we're looking here. We enter this trade going all the way up to here. Probably would have included there, and we probably would have been stopped out here. Now, if your trading plan says it has to come back to these supports, then you would not enter the second trade, which is pretty much right there. So this all depends on your trading plan here. You could enter trades in between here that are not bouncing off support resistances, or trade only once they bounce off these key levels there. That's all based on your moving average trading plan. Now we're going to show you how to use Hakinashi to optimize regression lines. This is a snapshot of someone's trade I took on what they did to enter the trade here. And I'm going to show you this exact same thing in Hakinashi and show you how you could use it there. This trader pretty much is using a lot of things and going from a lot of things. We don't want to complicate it at all. So what we want to do is keep it simple. This is the same chart, believe it or not, as the other trader did. Okay. Now, what we're looking for, just like any other, how you optimize any other system, you want to look at the points where basically you would enter. So this is regression line. What you're looking is whenever price hits this top part, you're looking for bearish Hakinashi candles. Okay, when it basically bounces off the bottom part, you're looking for bullish Hakinashi candles. Here, you really didn't get a bearish Hakinashi candle until right there. So you could have entered that trade right there, and you probably would have been out of that trade right there for a small profit. The key thing here is that you never did get a bearish Hakinashi candle very close to that resistance, which is what you're looking for. The closer it is, the lower your risk, the higher the reward risk ratio. So in theory, depending on your trading plan, you probably would never have entered this trade right there on that bar because your risk is too much and the possibilities of 3 to 1 are pretty much low. So again, you're not trading in between this band at all. You're waiting for it to touch it. It touched it right there. Now we're looking for a bullish Hakinashi candle. You got it right there. You enter that trade, and now you're trading to the top, which you got right there. That's exactly what you're looking for as far as trading off main events off the regression lines. Okay, so that's basically the regression line scenario. Now, this concludes this video. In the next video, we're going to start talking about some more ways to optimize other advanced type of systems out there, such as harmonics, Ichimoku, and so forth.